What's up, everybody? It's Jimmy at Trading Decoded, and it is July 29th, 2024, 4:04 in the afternoon. The market is closed, and, well, we had some beautiful moves, both down and up, earlier in the day, and then the chart turned to absolute garbage after that, which it does that pretty often until later in the day. But many of us were able to make a lot of money pretty early in the day. And when that happened, guys, just please consider looking at it like this. If you know that you have a day job, most of us do, and you work 8 hours a day, would you stay at work if I said, hey, Johnny, if you get all your work done in 30 minutes or an hour or 20 minutes, I'll still pay you a full day's pay. You could stay all day if you want, but there's not going to be any additional financial gain. Oh, and by the way, if you do stay longer and you make a mistake, I'm going to take away some of the pay that you already made for the day. Most people would just go to work, get done what they had to get done, and leave as early as they can, making the pay that they already go to work for 8 hours a day for in the first place. Treat the market that way, okay? Because the problem with the market is that you can get in, you can make good money, and yes, you're more than welcome to stay at that office and trade some more, but it's one of the only businesses that will take money out of your pocket if you make mistakes or overstay your welcome. So please, if you make good money, you hit your goal, or you make as much money in 10 minutes in the market as you do at your day job in a week, don't be greedy. Greed will cost you a fortune. Okay? Greed will cost you a fortune. With that said, let's go ahead and launch charts. We're gonna stop analyzing the chart after 12 o'clock. I don't trade after 12 o'clock. Most of the things that we do in the live trading room are done all before 12 o'clock. And so to shorten these videos up a bit while sharing what we did and what we found and why, the concept carries on throughout the entire day, any day, for why we get into these trades. The difference is the mechanics change, right? Theta increases throughout the day. Pullbacks hurt more later in the day. Volume changes later in the day. Support and resistance changes later in the day. So for me, the probabilities start to stack against me the later in the day we get, and that is why I choose not to trade after 12 o'clock. Almost every single day, I have made very decent money, to at least enough to pay my living in an hour. Okay, and I'm trying to teach other people to do the same thing. But let's go ahead and launch the chart, see what we got going on here. Pre-market was a little, we gapped up. Basically from Friday's after hours. You know, we bounced up here. Made it almost to Friday's high in pre-market. We did, and we got above it. You know, after 8:30, I did on my charting at 8:30. So this was kind of annoying. But hey, lines work no matter what. But we had a pretty tight pre-market range. And then fortunately, and I was ready to play calls again today. Most of the market looked happy. I even wrote in Discord right around 8:45 how happy the market looks, and the top 10 were green. And I was like, oh, maybe today's going to be a call day. Well, then we started to sell off leading into the open. Now, 9:25, call put scenario. Call line we put at 546.45. We were looking for the move to run up to pre-market mid if we were going to play calls. Okay, minimum. We wanted to get there. If we got through there, we'd expect it to get up to the pink line. Okay, to the downside, 545.62. Although we were talking about putting it right here at this support, saying if it gets through that, we'd want to ride that thing down to at least the next line, and hopefully we can close below that, and maybe that gets us lower. Now, in pre-market, we started about on that line and worked our way up from there. So from here, that's why this circle's here. Now, the market was opening. We were leading down into the open. That means that I'm prepared for puts, not calls. It's real simple. I don't complicate it. It doesn't mean puts are going to I'm going to get into puts. It doesn't mean that the market is going to sell off just because we were trending down into the open. But it means that I'm expecting momentum, odds-wise, to continue, even if it's for a short period of time. There's been plenty of times where it doesn't do that, but if I'm going to play the open, then I want to be semi-prepared for what I want to play. If that candle would have printed green and got through the call line, I would have missed the trade because I wouldn't have been prepared for calls. I was prepared for puts. Now, what's beautiful about this particular situation is not only did we breach our put line, but Qs were below their pink line and turned it into resistance really early. And ADD was giving us momentum to the downside. So everything lined up red at the same time, ready, set, go. Here, I've marketed into this somewhere during this candle. And we got out. I got stopped out on this green candle here. Now, maybe a little bit premature. Could have got a little bit more out of the trade. I felt comfortable getting out there. At that time, we were hoping that the Qs were going to continue down. Okay, because they closed below support here, SPY closed below support. We were holding out for the next line down. Okay, we were holding out for the next line down. Now, I got stopped out because once we crossed my original profit target, I will put a stop in place and then start to trail my wins if it were to continue going down. That's how I do it. But we have several people in here that do things differently, and there's nothing wrong with that. So I got stopped out in this green candle with a 49.2% win, okay, from entry to exit. Now, for the people who were still holding on to this trade, I did continue to try and talk them through that, saying, hey, Qs, if they get back above, in fact, once we got down here, I said, if Qs get back above 464.78, I'd start to be concerned with the move continuing down. Well, the very next candle, it got closed up above that resistance or support. Okay, you needed that to stay as resistance, hoping the move continues down. It didn't. Well, not only that, but we put in a higher low. Higher lows are bad for puts. At this point, we're also starting to get flashing green gem indicator. Doesn't mean it can't continue down from here, but it absolutely means you should consider maybe that the momentum that was keeping you in those puts is dying. Maybe put a stop loss in place. Maybe slide it a little bit tighter. But if we get above that line on the SPY, you're going to want to get out of the trade. And as I don't want to say luck, but it's not like we couldn't see it coming. We tried for 5 minutes to get lower and we couldn't. At some point, you've got to understand that if the market can't go down, that's because there's buyers there. And if the buyers are stronger than the sellers, it's going to go up. That's exactly what happened. So the reason this is here, I stopped out here. The reason this is here is because the gem indicator was showing up. Qs had already broken through their resist or support turned to resistance, created a new support, and was putting in higher lows. Once the Qs got above this pink line, it was game on. Okay, so at 9:41, Qs were above. They had broken, retested, turned this into support. Let's go, boys. It's call time. We get in here. Where are we looking for? The call line. Why the call line? Now, what I'm very proud of is that nobody took calls at this line, which is the line that if we cross, we were supposed to get into calls. Why not? It's very important. And this is what I'm not in this trade, by the way. I'm watching other things. I'm saying, guys, if you're in calls or considering calls at the call line, please wait for a close above the pre-market high on Qs. Don't buy calls on SPY when Qs are at resistance. Yes, I'm aware it's an uptrend. Yes, I'm aware of all the momentum to the upside at this point. But I'm also aware that there are resistances. It tried to stop here. It tried to stop here. It's going to try and stop here. It's going to try and stop here. It's going to try and stop at every resistance for the most part going up. If you don't want to partake in that fight between the buyers and the sellers, simply take your profits or wait for confirmation that those sellers are not there. So fortunately, this was an exit point, not an entry point for the calls that were bought down here. Okay? We're coming off higher lows on Qs and SPY. Higher lows are bad for puts, so puts were not a consideration. And off of higher lows, we're expecting resistance to fail, not hold. Let's go. And the reason we got out here is because, well, the last time the Qs were at that line, they couldn't move higher. This time was no different. All right? So that was that trade. Now here, we just breached the put line again. And it worked line to line. Now that doesn't look like a decent move, but it's a 40-cent move. 40 cent pays, 15 to 20%. So for those of you who got that, congratulations. No calls here, although it was a great opportunity. I was talking to the group about something else at this point. And then we pushed higher, got through the call line, but this time at 9:58, Qs, this is why there's no arrow there. Qs were almost at the same resistance again, right? So even though we're breaking the call line and it did move up a little bit more, that was actually a trade that would have paid. I would not have taken that because the Qs were at a resistance that had held once, twice, 3, 4, 5, 6 times. 7, if you count that. I'm not going to go against those odds. Okay. It did break and it made it up to the next resistance. So kudos to anybody who got in to calls. Also worth noting, congratulations to anybody who bought the pullback to support on the Qs at 9:52. That would have gotten you into this call trade pretty soon, and you would have made good money on that. But the next trade we took, and this was the final, this is only the second trade that I took, and it was the last one for me, was a breakdown. We retested it as resistance, but more importantly, at 10:09, the Qs were stuck below a level of, they had just gotten through their support and were pulled back to resistance in a downtrend off a lower high. Let's go. And once again, we're aiming for this support down here. We talk about the potential of it holding here like it had done before. So if you got into puts at the pullback and you got down here and you wanted to hold on to those puts, all I ask you to do is put a stop loss at break even. It's exactly what we talked about in this trade. Guys, you don't have to get out. You don't have to move your stops down. Just put them at break even so that if the support does hold, you've lost nothing for your attempt at this trade. Fortunately, ADD, I think at this time, started moving back down again. Let's see, what was going on at 10:09 on ADD? Yeah, we had started to sell off again at on ADD. So momentum was shifting to the downside again. Qs were pulled back to resistance during a downtrend off of a lower high. Okay, we're expecting support to fail, not hold. All right, SPY was pulled back to resistance. Let's go. We waited for the Qs to get down to that level of support again, which is at 10:14, 10:15, right here. Same support on SPY. That right there ended up being a 52% winner. Okay, if you were playing the put scenario again, you had your opportunity to get in here. You could have got out here. You could have held, like many of us, down to here. Okay, once again, we pull back to resistance, and at 10:25, if I'm not mistaken, Qs were at resistance again, right below that pink line. The same reason that we got in over here. They had just closed below. We talked about this before it happened, guys. It's an uptrend. It's a flag, whatever you want to call it, being broken. Okay. We break, we close below support. We're looking for the next support, which is right here. Okay, right there, this double bottom. Look at where those candles stopped. Okay, so again, aggressive entries. ADD was moving down. All the things were pointing in the right direction, and we make it lower. So at 10:34, Qs were back on support. That's where you have to get out. I forgot to draw my circle down there for those people. But verbally, we're talking about this the whole trade. All right. Now, we've developed a nice downtrend here. In order for a downtrend to continue to be the downtrend, you got to have pullbacks to resistance, and you would expect support to continue to fail. Ultimately, at some point, that's no longer going to fail, right? It's going to find a support that holds and go the other way, which is ultimately what ended up happening. The Gymdicator was on point today, oddly enough. I don't say odd, but it's just telling you when confluence or momentum is in your favor. These red green arrows that are here, those are an indicator that I created for our community members. And all it's telling us is when ADD, Q, SPY, and NVIDIA are moving in the same direction at the same time. Okay, that's all it's telling you. So we're just looking for momentum without having to watch 1,000 charts. Now, I watch all these charts in real time, but the indicators for people who don't have the ability to have multiple screens up, right? So that's what it's for. But if you use it properly, i.e., if you get one of these red arrows during a pullback in a downtrend, it's usually a pretty good entry point. Okay, and you could see here, we were trending up, I wouldn't have taken puts because of this indicator here. Okay? I wouldn't have. But here, when we're moving down off of this downtrend to resistance, let's go. Pulling back during a downtrend to resistance, let's go. Pulling back to resistance during a downtrend, let's go. It's all over the place. And then I wouldn't have bought this one either, but it called it perfectly. When we were talking about when would you consider getting into calls again? Well, first of all, and most importantly, you need this right here to be over, okay? You don't want to be buying calls during a downtrend, guys. At least wait for the break of the trend line. And then, even if we get that break, please make sure that you have room before you run into your next resistance. So here, if you got in aggressively, you have to look at this area first. And as long as there's at least 20 cents or whatever number works for you of room to go, take the trade. But there's going to be plenty of times where you get in or consider getting in at a break of a trend break, and you look left and you're already at a lower high. Okay, that is a form of resistance. You've got to watch out for that. Okay, you have to watch out for that. Or you can wait for a major level of support resistance to fail. This yellow line, for example, we got through that and continued up. After that, guys, I was going into lunchtime. I went ahead and took myself off the mic for an hour and 10 minutes or something like that. And that was it. After lunch, it turned into trash. You had some opportunity here on this drop if you were playing puts at this point for some reason. And then a very, very, very slow grind to the downside, which we did have people in this trade trying to trade it. It just was not clean. There was opportunity there, but it took too long. And then the 350 candle, we got a red candle at 350. And as you guys know or don't know, a lot of times, whatever color this closes, the odds, statistically speaking, it's not even odds. I don't play this, so I want to be very clear about this. More often than not, we close below the 350 candle if it's red and above it if it's green. Okay. Now, I don't trade that. We have people in our community that trade the 350 candle. Some do very well because contracts are very, very cheap at this time of day. And oftentimes you'll get a nice move going into the close, up or down. And those contracts will gain a whole lot of value very, very quickly. But again, I don't trade after 12 o'clock. So you will never or rarely see arrows and exits and entries on this chart after that point for that reason. If I don't feel comfortable taking a trade, I'm not going to try to convince you feel uncomfortable taking a trade. Okay. You can trade a different style and do what you want. It's your money. But it would be hypocritical of me to say, yeah, guys, I wouldn't do this, but I think you should try it with your own money. No, that sounds horrible, right? Oh, and by the way, if you're wondering when you should consider puts again, after this trend breaks, at least. Okay, so again, super strong move to the upside. Don't get into puts because it can't go higher, or you think it can't go higher, or it shouldn't go higher, or whatever the case is. Wait for a strong level of resistance. Wait for a rejection of that resistance. And more importantly, wait for that trend to end. First and foremost. Do you buy here because it ended? No. Would it have worked out? Yeah, but you were buying right on top of a support level. At least wait for that to not be support so that you can know, like we knew, we were talking about this. If we get below this support here, I expect SPY to come down to, first would be here, right? This support at 546.18, and then the next one down is here. Okay, the next one down is the yellow line, and then this one. And it made it to all these things. Look, right here. Look at that. It's not on accident, right? You're constantly looking left to find, okay, if we break the support down here, where should it go? We told everybody, if it gets through this level here and SPY and Qs are not on support, it should move down to the yellow line. It did exactly that. If we close below the yellow line, we're expecting it to come right down to the next support, which is not the yellow line. It's right here. Just look at the candles. Look at where these stop. Okay? This happens all day long, guys. They're there. You just got to know how to use them. with that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below, and your first week's completely free. If you like what you get for the week, consider becoming a paying member. If you don't, well, thanks for stopping by. I hope you learned something. And that's pretty much it. So I hope you all had a fantastic day. I hope you didn't lose till the later part of the day, which a lot of people did. Our ratio went from about 8-1, green to red, to what was 3-1 by the time the market closed. Guys, if you do this little test for yourself, look at the chart, zoom out, right? Especially after lunchtime, and say to yourself, would you have looked at this and said, man, I missed an epic day? If the answer to that is no, at any point in time, walk away. You know what a bad chart looks like, you just can't peel yourself away from it. And the problem is that those who can't peel themselves away from it also can't stand watching it without doing something about it. If you know that is you, it is in your best interest to zoom out, look at the chart overall and say, yeah, that's not looking great. And I'm not going to fall victim to that. Okay? And do what's best for your money. With that, I hope you all have a fantastic evening. Till tomorrow, I love you guys. See ya!